This is your Truth Bombs radar. This is where we look at the numbers and the companies that are on our radar, the Truth Bombs radar for the week ahead. Let's start with what we're expecting in terms of economic numbers. I think next week we can call it pretty much a data dump. So there is an ongoing onslaught of numbers that were pent up, locked away in file cabinets in Washington, D.C. that could not be released during the shutdown. And now all these agencies are doing us the big favor of releasing them late. So we're going to continue to get numbers that should have been out months ago. So we're going to continue to get those. And it's really important to differentiate these numbers, right? Because if you're not paying attention, if you just look up at the screen and you see, oh, this number came out, and you don't realize it's for September, you're looking at stale data. It's like you're driving to get somewhere, you're driving a car, and you're using your GPS, and it's telling you how to get out of your driveway, and you're already halfway to your destination. So kind of useless data, but it's data nonetheless. And I love data. And of course, we like to fill in those data points when we can get them. So it's going to be a data dump week, but in the midst of some of that old data, there's some actually important data. Let's look at the numbers. Okay. Let's start with ISM, Institute for Supply Chain Management. That's a private number. So that means it's current. ISM comes out with PMIs, Purchasing Managers Indexes. We talk about them often. I really like these numbers, right? You all know about my obsession with consumer confidence numbers and sentiment numbers because we want to know what consumers are thinking and doing because it impacts the economy so much, right? Think of PMIs as confidence numbers, but for corporations, right? This is also poll data, right? So these nice folks at ISM, they poll managers at companies and they ask them questions about new orders, about inventory levels, about employment, what their plans are, what their current situation is like, what their sentiment. So they want to get an idea, a pulse of what companies are thinking. And so if you believe, like I do, that consumer sentiment's important, well, you would be even more interested in knowing what sentiment is from companies. Because remember, we talk about this a lot. Confident consumers consume. Consumers can only be confident if they have jobs or if they feel like their jobs are safe. Who supplies said jobs? Who pays those employees? Companies. So healthy companies keep people employed and prospects are good. So we want to know, what is the sentiment of companies? Okay. And so we're going to get ISM manufacturing this week. And so we're going to get PMIs for manufacturers. And that is a November number. Now, we talk a lot about manufacturing. Manufacturing only represents a small part of the US economy. We're very much a service economy, but manufacturing has bigger impacts, broader impacts on lots of other things, right? There's still all these other services that are dependent on manufacturing that still exists in our country. And of course, the current administration is very focused on reshoring a lot of manufacturing. So we need to watch manufacturing very closely, despite what its role is in the economy. So that's very much on the Truth Bombs radar this week. That has been struggling. So we get a couple of different types of ISM PMIs in a month. ISM is just one of them. And that number is actually expected to tick up slightly. Okay. We're looking for 49.3. It was 48.7 last month. Don't worry about those numbers now. We'll cover them again when they come out in the week ahead. But I will tell you that the thing to note is that those numbers are below 50. And PMIs, general rule of thumb, below 50 means they're contracting. Above 50, they're growing. So 49.3 from 48.7, really good, but still below 50. So manufacturing still expected to contract. But we're going to watch it carefully because we want to know the details of that. Later in the week, we will get the ISM services number, right? So then they go into the services industries, right? That is the largest part of our economy. We know all about services. And that number has been struggling a little bit, right above 50. Okay. In fact, economists are expecting that number to decline slightly month to month, 52.4 last month, the current month, 52.2. So it's a slight haircut on that number. But of course, like the other one, we want to watch it very carefully because services, big services, employ lots of people, right? And we want to know, how are they doing? Are they going to keep hiring people? Might they fire people? Are they under stress? Are they going to continue to raise wages? Okay. All that kind of stuff. And we're going to look carefully at that stuff. And we're going to get that this week, the week ahead. We're going to get one of my, again, I'm so sorry, but you really do have to buy the t-shirt. Okay. And while you're considering buying that t-shirt, go to our homepage and check out all the videos that we have. We have a lot of videos that go into depth or explain even more depth on what's going on with these numbers. And of course, as these numbers come out, we're going to actually, we release bomb blasts so you can see what actually happened. So go to our homepage. If you like this kind of content, make sure you click like and subscribe, because that's really important so you can be in the loop for this kind of stuff. So let's get back to personal spending and the t-shirt. Okay. We're back to consumption. And what's another way that we track consumption? Well, we look at personal spending. Okay. And personal spending, we get it once a month. And that is literally the number that plugs right into GDP, right? We talk about consumption. That's what we want to know. Is it growing? Is it shrinking? If it's growing, good for the economy. 2/3 of the economy. If it's shrinking, not good for the economy. That you can't get more basic than that. And we get that personal spending number. It's actually, interestingly, it is not one of those sort of shiny Hollywood type numbers, right? It doesn't get like the attention it really deserves, but it is very important. And geeky economists like myself love to watch personal spending numbers, right? And we haven't gotten that in a long time, but we are going to get it this week. That's coming up. But unfortunately, it's for September. So that's one of those numbers that we'll be happy to have. However, it's not telling us what we really want to know about what's going on possibly with GDP right now. Okay. And of course, but we're going to get it and we're going to look at it and we're going to look for any kind of interesting things that come from that number. Okay. We're also going to get the PCE price index. Okay. Personal consumption expenditures price index. Sounds crazy, right? But that happens to be the Fed's favorite gauge for inflation, right? We talk about CPI, consumer price index. Everyone talks about that, even my mother-in-law. And you know the story about my mother-in-law. She knows everything about everything. So if she knows about CPI, you need to know about it too. And she knows about CPI. She really knows about CPI. Trust me. But PCE is what the Fed watches, okay? And we're going to get that number finally, once again, in this upcoming week. And that's great. Very timely, because guess what? In 10 days, the Fed, or whatever, in a couple weeks, the Fed is going to have their FOMC meeting. And they're going to have to take all this data and they're going to have to make that very, very important decision that clearly the market is hinging success on. And so they're going to very much be look at that PCE price index number. But there's a problem. It's for September. So they're basically, again, going to be looking at stale inflation data. Okay. And they're not going to know what happened in October, which was the month before November, which is where we are today, which is the month before where they're going to make that decision. So they're going to continue to be driving in the fog, but they will have at least another data point. And the PCE price index is expected to be at 2.9%, right? That is higher than 2%. The Fed's made up target, which they call the long-term average. But in fact, it is not a long-term average. If you look at the long-term average of inflation, it's closer to 3%. But the Fed would like it to be at 2%. Okay, I got it. But it's at 2.9%. Expect that number to move markets a little bit, even though it's a stale number, because most people are not going to look at the parentheses that say September. And it is a data point. We don't want to see, obviously, any big spikes in inflation, right? Because inflation is still very much a problem, and it is still 50% of the Fed's dual mandate, and they are clearly very nervous about inflation. So PCE price index comes out this week. Two more numbers. ADP employment change. That's the big one. You've heard me rant and rave about ADP and their numbers, right? ADP comes out with a monthly number, okay? And the monthly number always comes out in the first week of the month for the prior month's employment situation. And I'm not going to get too much into it because I talk about it so often. Remember, ADP is a payroll processor, so they use their records to come up with these numbers. That's why it doesn't sometimes jibe with the government numbers, which are more statistical numbers based on surveys, right? So they are projection. They're making projections versus ADP, which is actually just adding up and subtracting actual employees that were fired or added for the month. They're coming out with their number. We don't know what that is yet. We haven't tallied up the economists' estimates yet for that. But the last reading we got was 42,000 new jobs added. But if you've been paying attention and you've been following our videos, and I hope you are, we have been getting weekly data from ADP, okay? And the weekly data has been showing us some signs that the employment situation or the labor market is in decline. So whatever that number is, we're gonna report it to you. So you're gonna have to check back on our homepage. We're gonna let you know as we get closer to that number what to expect once we tally up all the what the economists are all expecting. And of course, we'll report it when they deliver it, right? Because it's that important, and you'll probably get a bomb blast on that. So keep your eyes open for that. And you can only get informed of that if you click subscribe. So please click subscribe so that you can be in the loop. Because I want you to be in the loop. We take the time to put this together for you so you are in the know. And so the ADP number is coming out this week. It's going to be very important because we're not going to get a Bureau of Labor Statistics number, which is the regular non-farm payroll number. In fact, they skipped October. We're never going to get that. We're eventually going to get November, hopefully next month, on time. But so ADP is another important data point. And of course, we've led up to this with the weekly ADP numbers. Finally, the last one, we're going to get University of Michigan again. We talked about that early on. You guys know my fetish, my never-ending thought process around consumer confidence. You know why I love the Michigan number. We just got a final number. Next week, we're going to get a preliminary number. So we will get the preliminary number already for December. Okay. And of course, we're going to watch that because that has been falling apart in front of our eyes. So we're going to report on that as we get closer and we tally up what the economists are expecting. Now, earnings season. Earnings season is not over yet. Earnings season, we still have a couple of important earners that are going to announce in the week ahead. And namely, I'm just going to give you three here that I'll be looking closely at. Number one, CrowdStrike. Okay. CrowdStrike is a broadly held stock. Of course, they're a data security company. They're a cybersecurity company, probably one of the most prominent ones. CrowdStrike has been doing quite well, pulled back a little bit recently. CrowdStrike will be announcing their earnings. It is a potentially market mover, right? It can have implications that go beyond just CrowdStrike's price. We'll be watching CrowdStrike very, very closely. You'll have to check back because I'm sure that we will be putting videos out about that. CrowdStrike at this point has 5.1% upside according to average analyst targets over the next 12 months. But that's one that a lot of people are going to be watching very, very carefully. The week before, last week, we got Zscaler also in the space. they came out with a blowout number, which looked very, very good, with the stock got beaten up a little bit because people are expecting so much from these companies right now. Even if they beat, even if they have only good stories to tell, even if their guidance is good, sometimes these stocks trade off because hopes are so high right now. And CrowdStrike will be very much looked at the same way as folks looked at Zscaler in the past week. Marvell is coming out. Marvell is a semiconductor company, right? Anything that has the word semiconductor in it, right now is under close scrutiny. So we're going to be watching Marvell and see what they say about the state of the industry, about their customers, about their challenges. And we will watch that carefully. That will have bigger implications of the broader tech market, which, as I would tell you last week, had a pretty solid week. So Marvell has a little bit of upside, 6.1% upside, according to analyst median 12-month targets. Salesforce, in contrast, is a company that has struggled quite a bit in the last 12 months. Salesforce is still a very fine company. And Salesforce is always on the cutting edge it's a CRM company. However, they use the latest and greatest technologies. They were very much in cloud. They were first movers in the cloud. They are first movers in AI. And a lot of people want to hold them because they expect that Salesforce, and I'm sure you've heard the commercials about Salesforce and their use of AI so that it can anticipate when your air conditioner is going to break, and they send, it's that kind of stuff. I'm sure you've seen those great commercials. But Salesforce, very much on the cutting edge of AI. They have been overlooked because of that. And they have been very much in the news lately because they too have been very vocal about the costs associated with managing AI solutions, maybe trash talking NVIDIA a little bit, but that is the style of the Salesforce CEO. But Salesforce is one of those stocks that's probably beaten down more than it should be, but it is down. So that might be viewed at by some people who believe the story of Salesforce and their potential, might believe that might be a good value with some potential growth. Salesforce has a 43.1% upside possibility based on what the average analysts think. So we're going to get Salesforce next week, but we're going to get other things. There are going to be other companies. And again, this is where I have to remind you to check back often because we do drop these a lot. If you click like and subscribe, this way you'll be in the loop and you'll be aware of when these things do drop. We drop lots of videos every single day. And we got a big week ahead of us. We have still to watch these themes that we have been watching to see if there are continuations of these themes. These big rotations, right, that we were talking about. Are folks going to continue to rotate back into tech? Are they going to reverse and go back and they're going to rotate out of tech? Is the rotation within tech from companies like NVIDIA to companies like Google, Alphabet, is that going to continue? What's going to happen with Fed funds futures, right? We know that Fed funds futures predicted a higher probability of a rate cut in the month ahead. That could change. And we will see that change even over the next week. So we're going to have to continue to watch that. And with that, we also watch bond yields because bond yields also are attempting to predict where interest rates are going to be in the future. And they move up and down based on markets' assessments of what the Fed might do. And it all comes down to the Fed. So, really this is the setup week. We're really sort of, flying into Fed, starting this next week. We're past Thanksgiving. Now we're thinking about end of year. And people are going to start talking more about the potential Santa Claus rally, especially after last week's market melt up. And that will be the themes that we'll be looking at in the week ahead. And we will be probably releasing lots of bomb blasts and lots of daily videos on these things. I want to make sure to ask you to leave us comments below because we love the comments. And we use those to decide what videos we do next. And that was your look ahead to the week in front of us, your Truth Bombs radar that you should be watching so you could know what's heading for you and your portfolio. Join us every day for Wall Street Truth Bombs, where we drop them here before the market figures them out.